Hey everybody, this is Carlos Velez in New York with our annual Year in Review 2023 edition. So, what did we find interesting in 2023? Well, three things. First of all, we'll start where we always start, and that's with the approvals. I always recommend to people to visit the FDA website and take a look at the list of approvals. There's always some interesting drug candidates in there, well, products now, that are approved every year, and you don't hear about them. Some of them are frankly rather obscure, so you see the link there below. Do take a look at that list. As always, makes for interesting reading. As of middle tail end of November, we're at the 48 approvals for the year. Which is great. That's sort of where we have been historically. Three of the approvals that I found quite interesting. First of all, Leqembi for Alzheimer's, which we'll talk about in a few minutes. Izervay, another intravitreal product for this one for geographic atrophy, and the third one, Skyclarys, interesting name. That one I found interesting for two reasons. One is because Friedreich ataxia is a really tough disease to tackle. It's good to see something approved for this one of many variations of the various ataxias. But secondly, if you read the package inserts, the mechanism of action of Skyclarys is actually unknown, which is I always find it interesting when you see a product that's approved and frankly the innovator has no idea how it works, but it does work. It works well enough to be approved. So do check out that list. It does make for some interesting reading. Now the list of approvals and some discussions that I had with folks both at Bio and Bio Europe this year led me to think about this question, which is it getting more difficult to get drugs approved? And part of what triggered the question was this article, which noted the number of complete response letters from the FDA. It's been rising. It's been rising steadily since 2018. Now 20 doesn't sound like a lot, but when you consider, how many, NDAs and BLAs are submitted, it's a sizable number. I would call that a significant number. Now, why are they rising? That's the interesting question. Obviously, we are developing, more complex modalities. There's a much greater interest in first-in-class, which means you're targeting unvalidated, or you're looking at unvalidated targets rather. And the complexity of small molecules is actually increasing. And I going back to, when I was, pharmacy student and then a pharmacist in the late 80s, these were the kinds of molecules that were being developed and manufactured and getting approved and dispensed and so forth. Even something like Lacerta, which I believe was approved either 2010 or 2015, probably 2010. It looks a little bit more complex than what preceded it. But if you look at some of the monsters that are being developed and approved these days, it shouldn't be much of a surprise that we're getting more and more CRLs, more and more difficulties when it comes to getting drugs approved. And I'll show you some more data on that in a moment. Now, some investors love all this, right? The more complex the modality, the more likely you are to be, first in class. But it's getting really, really tough. I mean, if you're first in class, clearly you can win that race. If you're second in class, third in class, you really have to be really demonstrably better than what's first in class on top of standard of care, in order to garner significant market share. So, it's getting really, really competitive, really, really complex, and therefore the industry as a whole is accepting more risk. Therefore, you see more and more CRLs, which leads me to this point, which is the likelihood of approval. Now, I teach several licensing courses. In those courses, I use this paper, the Hay 2014 paper, in which they calculate phase success rates and likelihood of approval across multiple therapeutic areas, multiple indications. If you're interested in this paper, just contact me. I'd be happy to email it to you. Now, for educational and training purposes, the Hay 2014 paper is great. It's a great teaching tool. But the database that they use in the paper, in their analysis, runs from 2003 to 2011. And so a lot of the modalities that we're looking at these days, for obvious reasons, are not included in Hay 2014. Now, fortunately, IQVIA has been looking at probability of success from phase to phase to phase and likelihood of approval data over time. And so the most recent IQVIA data that I saw, and I have this report as well, according to IQVIA, if you look at phase 1 probability of success, in other words, this is the probability of a drug candidate successfully exiting phase 1 and entering phase 2, right? So what I did was I plotted that first data point there you see, that's from Hay 2014. And as you can see, according to IQVIA, the probability of successfully navigating out of phase 1 and into phase 2 has been decreasing quite steadily since 2015, 2016. If you look at phase 2, it's declined and it's picked up a little bit. This is phase 3, which has dropped quite a bit, 68% back in the Hay 2014 database, down to what, let's call that 50-ish%. And regulatory, which, for all intents and purposes, for many drug candidates was a shoo-in, has dipped below 75%. So if you multiply all these numbers out, according to IQVIA, we're looking at composite success rates that have dropped from 15, 16% down to 6%. 6% likelihood of approval for drug candidates that are in phase 1. That's dropped all the way down to about 6% from about 16% in 2017. Now, what does this all mean? Does it mean that we're getting worse at drug development? No, I don't think so. And in fact, it's probably the opposite. We're actually probably getting better at drug development. But, we as an industry are choosing to do harder things, which are obviously less likely to succeed. And, for better or for worse, the regulatory agencies are becoming much stricter about what gets approved and what does not. And so, 2023 for me personally was a bit of an eye-opener in terms of what is the probability of something getting out of phase 1, getting out of phase 2, where as an industry we're developing things that are much more complex, much more challenging. That's obviously going to have to continue if more and more companies are willing to take that risk in order to become first in class, best in class, and so forth. So that was topic number 1 in 2023. What else was interesting in 2023? Big Pharma is back. Yes, we are back. What do we mean by that? Well, the thought was triggered by what's been happening in the obesity market. I'm sure if you're watching this, you're familiar with the drugs that are out there these days. First for quote unquote diabetes, and then quickly morphed into obesity. There are a couple of reports that are out there. B of A, in one report, projected 5 to 10 million patients on anti-obesity medication by 2026. 5 to 10 million, that to me sounds really, really low. Goldman Sachs was estimating something in the order of 15 million patients in a few years on anti-obesity medications. That also to me sounds a bit low. Frankly, most analysts are looking at the anti-obesity medication market and they're saying this could be, the first $100 billion class or the first $100 billion market that exists in our industry. What's really potentially interesting about this is, if this is the way to reduce the prevalence of obesity, this could be finally, the way to tackle, all of the secondary diseases that are caused by obesity. This is one estimate by CDC. They estimate that something on the order of $170+ billion is spent on obesity-related medical costs. Okay, obesity-related medical costs. okay, which are substantial. I won't go through the whole list here. It's pretty well documented. Health-related spending is much higher for those diagnosed with obesity versus those that are not. So clearly, this is a segment that has very quickly moved, beyond just the management of diabetes and into a much, much larger, patient population, which could in theory really have a dramatic impact on overall healthcare spending and healthcare costs. And while companies like Novo and Lilly are leading the way here, they're not the only companies in this space. This is the pipeline I pulled from Biomed Tracker. I pulled this in mid-November. It's clearly not up to date. Rybelsus, for example, has recently been approved. A mix of large companies like Boehringer Ingelheim is in the space. There are a number of smaller companies in the space, and this is just phase 2 plus. The list is much, much longer when you look at preclinical and phase 1. So a lot of activity here. Whether other candidates will come in and capture some additional share from the current products, we'll just have to wait and see. But the interesting thing for me looking forward is whether Big Pharma is finally, beginning to diversify, especially away from diseases like oncology. Now, I've talked to a few folks about this, and I can't make a sweeping generalization here, but what's clear to me is that an area like oncology has its challenges from a drug development point of view. It's becoming very competitive. It's becoming very difficult to recruit patients. It's becoming really expensive. If you look at the probability of success data from Hay and from IQVIA, it's actually quite risky to develop something in oncology, even though the pricing and reimbursement is actually quite attractive. So, it begs the question: is obesity an example of an area or areas where Big Pharma can go back to treating some of the high prevalence diseases that we have historically treated, whether it's other metabolic diseases, some interesting things happening in the pain space, for example, interesting things happening in ophthalmology as well, especially now that we have greater acceptance of intravitreal injections. So it'll be interesting to see how the industry evolves over the next, let's say, 3, 4, 5 years, and looking at some of these other high prevalence diseases. And look, Alzheimer's, I think is a great example of this. By first quarter of next year, we could have 2 to 3 reasonably good options for the treatment of Alzheimer's, which is a high prevalence disease that is growing very quickly and extremely difficult to treat. Now, slowing of decline may not be the optimal endpoint, but hey, compared to where we were a few years ago, this is tremendous progress in my view. And in fact, it's actually quite interesting when you look at Alzheimer's historically. The graph on the left is from Biomed Tracker. The red is a count of programs that have been suspended. And you don't have to look at this very carefully to see that there's a tremendous amount of red in that graph on the left. But there's a lot of things going on in the Alzheimer's pipeline, ranging from GLP-1, which is interesting, TNF alpha. There's a target that's been around for a couple of decades. Both tau and amyloid are being pursued. But if you look at the pipeline, at least by my count, 43% of the pipeline is targeting other things. So there's a wide range of targets that are being looked at in the Alzheimer's space, which is great. I think this is all phenomenal, and long may it continue. So what else was interesting in 2023? Show me the money. Number 3 is show me the money. Biotech public markets. It's been a bumpy ride. No question. There's no question about that. Deals are down, obviously, since we've gone through this bubble. Late 2019, 2020, early 2021 bubble. Obviously, a lot of those transactions are still being digested. Pharma is sitting on billions of dollars in cash. Pharma will continue to make strategic transactions where it makes sense. The tourist investors that we had a few years ago, yeah, they're probably gone, at least until the next bubble, or until the public markets become a bit frothier than they have been these past few years. But when you look at it, right now, if you look at the venture totals and number of deals, we're roughly on the 5 billion per quarter level, at least according to JP Morgan. And we've been at that level since 2022, which when you look at it historically, that 5 billion per quarter number, that's where we were in 2018-19 timeframe before the bubble. So one way to think about it is that, at the 5 billion per quarter level, we're about where we should be, at least historically. So we're kind of back to 2018 levels. And look, it's not a bad thing to have 5 billion in venture coming into our industry. Now, this JP Morgan report, which is also quite good, they have an interesting graph here. This is in licensing by Big Pharma, number of development and commercialization deals by stage of signing. Okay, which is kind of I've tried to pull data like this myself. It's kind of a tricky thing to do because you don't always know exactly the stage of development of the underlying technology. But regardless, first of all, the thing that struck me is, well, twofold. One is that these numbers seem a bit low. Again, I don't know exactly what the criteria were for inclusion in this graph, but it points towards this myth that Big Pharma only likes drug candidates with phase 2 data. And certainly in my experience, that's simply not true. Big Pharma, the way I see it, if they see something good, if it gives them the opportunity to be first in class, best in class, they will jump on it. Why? Because they can afford to take the risk, right? Big Pharma does have the capital to make some big bets. Not only that, when a big pharma company licenses or acquires a very early stage technology or a very early stage drug candidate, that provides them with obviously much better control over the program. They're not locked into a phase 3 program if the phase 2 program is already finished, right? If they get something preclinical and it does have the ability or the potential to move into different indications or even different therapeutic areas, the opportunity to control where this franchise goes, that option value is tremendous. And not only that, if you're talking about a very early stage platform, an early stage discovery platform, you're much more likely to have a competitive advantage and reach first in class. And so, this myth, this idea that, you have to have phase 2 data, it's just simply not true. And I'm glad to see companies like JP Morgan, publishing data like this to sort of refute that myth. And look, it's no secret. Big Pharma has a tremendous history of accessing, external innovation. This is a nice little chart put together by a fellow named Andrew Panu. I hope I'm pronouncing his last name correctly. You can find him on Twitter. And with the amount of cash that's sitting on the balance sheets of these companies, this is just going to continue in 2024 and beyond. Here's some more data published by Schumacher in October. Out of 138 Big Pharma approvals between 2015 and 2021, 65% originated externally. And you could read the paper. It's a short 2-page paper. But there's just a lot of innovation out there. A lot of it is going to be, grabbed, at a relatively early stage. There's plenty of capital within Big Pharma to either license or outright acquire some of these technologies, some of these early stage drug candidates. Having said all of that, it is tough. It's going to get even tougher from a licensing point of view to even get into the system, to get past the triage stage, as AbbVie calls it. It's just going to be really increasingly challenging for, a small startup to sign a lucrative licensing deal with a big pharma company because it's going to be so competitive. You simply have to be, with first-in-class potential, preferably a broad, possibility to have, a large franchise, so multiple therapeutic areas, multiple indications. If you have that potential, with a target that, is reasonably safe to hit, then you've got a shot at it. If not, it's going to be increasingly difficult. So what does this all mean? Yeah, I think we're back to 2018, which is not such a bad thing. There's going to be increasing demand for platforms with first-in-class potential. It's going to be competitive from a licensing point of view. Then it begs the question: well, what's going to happen with all these other companies that, maybe have drug candidates that are phase 2 and they're looking for a home, or platforms that perhaps are not quite there yet? I think a lot of these companies are going to have to shut down, or they're going to be acquired for valuations which are frankly going to upset a lot of early stage investors. It does mean that a lot of programs are going to be cut, which always makes for an interesting opportunity for, for example, venture investors who want to create new companies around, programs that are being shut down or being divested. I just love to read those stories of investors who team up with entrepreneurs and get their hands on an interesting drug candidate. Something that we haven't talked about in this video. I talked to a lot of service providers. Obviously, the consensus seems to be that while there'll be a lot of licensing activity in 2024, at least for these kinds of opportunities, these platform kind of opportunities, service providers are going to experience a relatively soft 2024. I hope I'm wrong as a service provider, but that seems to be the direction that we're heading in. What else was interesting? The Inflation Reduction Act. The Inflation Reduction Act. If you want a really good summary of the IRA, I would recommend this article written by Derek Lowe. If you don't know Derek Lowe, he's just a great writer. He writes just amazing, detailed, blog posts. He's on science.org these days. His blog is called In the Pipeline. He's been blogging for years. But he wrote a very nice summary of the IRA back in August. The long and short of it is that the federal law has changed such that Medicare can now negotiate drug prices. Now, the initial list of drugs was published in August. This is the hit list, as some are calling it: Eliquis, Jardiance, etc. We're in this negotiation period right now, which is scheduled to end in August. Once those prices are settled, the prices will be applicable in 2026. So this is a historical and brutally long process. The list will also expand, according to CMS, or maybe according to Derek Lowe, I'm not sure. The list will increase to 60 brands by 2029. So, this is a process that it's going to be long. It's going to be slow. Meantime, the lawsuits are underway already. There are some lawsuits underway. One of them, I believe, is challenging First Amendment rights, blah, 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 blah. I haven't followed that very closely. What's unclear to me is for the brands that are on this list or going to be on this list, I don't know when their patents expire. Presumably there'll be some generic or biosimilar entry here. I just don't know what the timing of all of these is, but if you look at some of the drug names on this list, these are not drugs that have been recently launched for, obviously. These are drugs that have been around for a while. When generic entry affects these brands, I'm not entirely sure, but it's curious to me that this process would be involving drugs where generic entry is about to take place. And look, if you're watching this video, as well as I do, it's not as simple as saying, let's cut drug prices and everything will be rosy. It's obviously far more complicated than that. So, what does this all mean? I think, if Pharma does take a very slight hit from pricing negotiated with the government, you know what companies are going to do. They're just going to jack up prices on the other products. It's kind of the rational, sort of logical thing to do. You know, who's going to win in all this? I think the lawyers will win. I think the politicians will win. You know, we've talked about this in videos in the past. You know, big pharma is a really easy target, you know, for politicians to get some sound bites. You know, and it's interesting to talk to folks in Europe, especially about all this. You know, they're concerned that if the pricing in the U.S. isn't there, you know, where are the returns to investment going to come from? I suspect that the IRA, at least in the near term, is really not going to have much of an impact. You know, we may not see impact from this for, I don't know, 10 years. Who knows? I frankly am not overly concerned about it quite yet, especially since the pace at which drugs are going to be added to this list is going to be slow. And again, we're just talking about a fraction of these markets. So you know, IRA is great for sound bites. I suspect this won't make that much of an impact moving forward. So here's some predictions for 2024 and beyond, and I have 4 of them. We'll start with artificial intelligence. Haven't talked about artificial intelligence much. I've advised a couple of companies over the past 12, 18 months. I'm sure you're familiar with this. There was a boom in AI. You know, this was an interesting thought, which hadn't occurred to me, which is, you know, is AI utilization, adoption, is it leveling off at the corporate level? Some, you know, like the survey from McKinsey, you know, suggests that it has leveled off to some degree. I think, you know, my response to that is, well, you know, what is AI for? You know, what is it for? And in our industry, I think we tend to forget that AI is more than just a suite of technologies used to identify, you know, hit compounds, lead compounds that'll be synthesized and tested and optimized, et cetera, et cetera. There's much more to it than just identifying hits, identifying leads, and so forth. And there's a very good article on the welcome.org site that discusses this. You know, is the pipeline coming out of AI, you know, is that going to continue to grow? Yeah, of course it's going to continue to grow. Is it going to be growing at 20% a year? You know, probably not. But I frankly don't see AI, you know, adoption and utilization, you know, leveling off anytime soon. If anything, I think it's just going to get better in 2024 and beyond. So I think we're going to continue using AI. There's probably going to be less, you know, a lot less buzz, a lot less noise about it. It'll become mainstream across the entire value chain. You know, it won't be the shiny new object. I think we'll still see some AI related deals done, whether it's, you know, licensing of drug candidates that came out of AI or novel AI technologies, or even companies that have AI platforms. We'll still see some AI deals done. But I think that those deals that'll be done they'll be quiet. You know, there won't be as much buzz as there has been in the past. Next, geopolitics. I don't remember where I read this or heard this, but somewhere along the line said that, you know, human beings are the worst people. And yeah, I mean, we're just in a bit of a, you know, the past 2 years have, geopolitically speaking, just been a horrible time. I don't know what else to say about it. I certainly don't want to spend too much time on geopolitics. I'm certainly not an expert on this. Somebody told me about this book, which I haven't read. It's called The Fourth Turning. And I have read the book. I don't know much about it other than it's basically a historical view, primarily of American history. And basically the book's thesis is that American history is divided into these time periods that last, you know, 100 some odd years. The last time period ended with the end of World War II. That started this next time period that we're in. And so we're at the tail end of this next time period, which typically ends with some sort of disaster or catastrophe. And so according to these authors, at least from my understanding, we will be in a geopolitical quagmire for the next 3, 4, 5 years until this current cycle that we're in will eventually come to an end and the next cycle will begin. That all sounds rather depressing, but it's forewarned is forearmed, as they say. So where are we going with all this? I think we're going to just have continued unrest at least until the U.S. presidential elections in November. It doesn't mean that we're going to have a positive outcome once the elections come and go. But with elections, it's the one thing that does happen with elections in general is that, the uncertainty around future policy will generally go away. If the incumbent wins, then it's, status quo. If somebody else comes in, there's going to be some change. So we'll just until we get there in November, we'll just have to see what happens. Economically, this past year has been challenging, right? Interest rates, we've talked about the stock market earlier. It's been somewhat volatile. Energy prices have been in the news. Fortunately, COVID is gone. You do see some masks around, but COVID is gone. I hopefully will never talk about COVID again. So are we going to be in for a bumpy ride in 2024? Well, perhaps not. If you read some of the articles I've read, here's one from Goldman Sachs. They're quite optimistic about the U.S. economy in 2024. GDP growth looks good. Inflation, people were talking about inflation earlier this year, but it's funny, when inflation is rising, people talk about it, but when inflation is falling, people don't talk about it. Unemployment looks reasonable. Consumer spending looks reasonable. According to Goldman Sachs, we will have slower business investment. Mortgage rates will still be high. So, I think from what I've read, 2024 will be a reasonably good year for the U.S. economy. I think it's still going to be volatile. Whether the tourist investors will return, I think that's an open question. Like I mentioned earlier, I think that's not going to happen until the IPO markets become frothy again. And I'll make one final point here regarding predictions. There are a lot of companies that are trading below cash. This is one analysis by KPMG. They counted, for example, out of 950 listed biotech and pharma companies, about a third of them are trading below cash. So like I mentioned earlier, some of these will be great acquisition opportunities. There may be some reverse mergers taking place in 2024. Now, obviously, some additional investment is generally useful for a reverse merger. But I suspect that there are going to be some very interesting diamonds in the rough here. Again, I love to read stories about companies that have been looked at slightly differently by a different set of entrepreneurs, a different set of investors, and repositioned and succeed in that manner. So that's it. If you're not familiar with us, at Lacerta Bio, we're a business development consultancy. We run in and out licensing. We work a lot on BD strategy and BD tactics, and we run a number of business development training programs. Some are public, some are private. If you're interested in any of these services, please feel free to contact us. And thank you for watching. Thank you for making 2023 a very good year, a very interesting year for us. We hope all of you have a very safe, very happy holiday season, and we will see you in 2024. Take care, everybody. Bye-bye.